There is a really big difference between trend trading and counter trend trading. Everybody, what's going on? My name is Shaquan, and in this video, we are going to be talking about the difference between trend trading and counter trend trading. Now, as some of you guys know, I have moved over to the futures market. Yes, I'm still trading Forex. I'm still swing trading it. But right now, I've also been focusing on the Nasdaq Futures market, primarily the 1 and 2 minute time frame. But what I want to show you is understanding and knowing the difference between when you need to counter trend trade and when you need to trend trade. So let's go ahead and get into it right now. So I am on the 2 minute time frame on Nasdaq Futures. The contract ticker symbol has changed. So it went from being NQ1 exclamation point to NQM 2024. Now this is something that's new to me because in the Forex market, our ticker symbols don't change. They stay consistent, they stay the same. So that was something that was new to me. Because when I tried to input a trade in last week, it wouldn't let me until I changed the ticker symbol. So make sure y'all are changing those ticker symbols every time a new quarter has started and ended, okay? Now, I want to make it clear that typically I take my trades between 10 o'clock a.m. and 11 o'clock a.m. Eastern Standard Time. For me, I found that this is the best hour for me to trade. First thing I'm looking for, especially if you've been with me for quite some time, you know I have a strategy called TMP. So I am looking for the trend first. And the first thing that I noticed when I come to this chart on this day was that the market was in an uptrend. How do we know that? Because we had a higher high, higher low, higher high. Now this is my analyzing time frame. I'm not going up any higher than this 2 minute time frame. I'm looking at this time frame to see where it is that price is and what it is that I need to do. What should have been done, because I'm going to show you guys the difference between a 1 minute time frame trading and analysis and the 2 minute time frame trading and analysis. Okay, what I wanted to do was take a buy in this area. We're going into 10 o'clock when the market is down here. I wanted to take a buy. Now, what should have been done was I would take a buy above $18,270.25. That was the goal. And I wanted to exit the trade all the way up here at $18,360.25. So that was the goal of trading, but I missed the opportunity by literally 1 or 2 points. And I'm going to show you how this was, but keep this analysis in mind that I wanted to be the buyer. Now on the 1 minute time frame, we have the same analysis, but the only difference was what I did was I just adjusted where I wanted to enter my trade by a few points. And you can see how the market never reached where I wanted to enter a trade. But that was okay because I was able to get into another trade as a trend trader. So as the market started to move up, keep in mind, I wanted to trade all the way back up to this high. Now, here's what I saw. When you're a trend trader, there are ways that the market can move. It could be an inside bar, like here. It can be more fluctuations to the upside. So when you set your mind to trade it in a specific area, sometimes the market will give you clues as the market forms and goes to the right? So I set up a buy limit. So if price came back and it retested the inside bar, that I could get into a trade and I can be the buyer. And it did just that. So the market made a new high. It came back to test the inside bar, and then price went up. And guess what? I am still the trend continuation trader because of what I saw on the 2 minute time frame. So this is how you know when you should be the trend trader, when the market is trending, right? Now, let's go over to the next trading day, which was Tuesday the 19th, and let's look at what it looks like to be the counter trend trader. So yet again, I was on a 2 minute time frame when I first started out. Now, I want to let you guys in on a little secret, right? Coming from the Forex market as a swing trader, I typically don't counter trend trade the market. But because I understand and I am aware that I'm on a 2 minute time frame, a 1 minute time frame, I will have to be the counter trend trader because I may not get a lot of opportunities in that 1 hour of trading. And I don't know how long it might take for price to pull back to give me an opportunity. And so I take my opportunities as they come. So looking here on the 2 minute time frame, this is exactly what I saw. I saw a high and then I saw a low. Now, two things could be true. The market could continue to go down Therefore, I will be the trend continuation trader to the downside, or the market could pull back, and that may cause me to be the counter trend trader, especially in a situation when the market is pushing down. And so when I saw this big bullish candlestick, we can also say it's an engulfing candlestick, that showed me that the buyers wanted to come back into the market. And so I knew that I wanted to be the buyer. And that's exactly what I did. So let's drop down to a lower time frame so I can show y'all how I took my buy. What I saw on this time frame, because I'm going to show you guys what I did, I'm going to show y'all what I could have done better. So I wanted to see if the market would come back up to the high and then potentially continue to the downside. And so this is exactly what I did. Now, my first buy should have came in at the close of this bearish hammer, but I didn't do that. But when I saw that the market made a new high going back up towards where I thought the market could potentially sell off if it stays below $18,152, I ended up buying. And so my buy ended up looking like this because I just really like setting pending orders. So this is what my buy looked like. Now, I want to show you what it looks like to trade, and to be honest, trade scared, because I know in the market, we want to be brave. We want to say we got it all together and that we know what we're doing. But y'all, this is a new market to me. And so every trade that I take at this moment, I'm taking them scared because I don't know if I'm going to win or lose. I don't know if they're going to work out, especially when I am stacking my positions like I did here. So the market ended up making a new high, and then the market fell back again. And I told myself, hey, if the market proves it could stay above this retracing higher low, I'm going to get in again. And it formed this hammer, this bearish hammer, and I ended up entering the trade again. I was able to move this stop up as well, so I don't have a lot of risk on that trade. And I traded it back up. I wish I could say that I traded it back up to that white line, but I did not. The market pushed up here, started to stall, and I actually ended up exiting both of my positions. That was $1,000 trade. Those two combined. Now, that's really good, but guess what I did after that? Now, I did not sell from the top here. I didn't do that. Instead, when the market started to push down, it passed this low here. I feel like the market could potentially probably stay below this fluctuation right here and then continue down. And so what I ended up doing was I actually got into a sell. And the sell looked good. And the sale was going well, but then the market ended up pushing back and I gave away $200. So while it was a good position and while it was a good trade and I probably could have covered the position, I didn't. I ended up losing $220 on that one. So my profit for yesterday was around $800, but I don't regret it because I still profited over here. And leaving these points over here to run left about $400 or $500 on the table. It doesn't feel good to do that. And I find that I do that from time to time, but I'm happy that I can recognize that this was a time to counter the market going back up, because there was no guarantee in this broad market that the market was going to fall back down to that low. And let me explain what broad means really quick. A broad market is basically when there is a lot of space for price to pull back. And so you can see the market made this big drop down. This is the previous low. This is the new low. So there's a lot of space in between for price to pull back. Most of the time in markets like this, the market may not continue to go back down, and a lot of times they will. But in situations like this, I have learned sometimes it's best to be the counter trend trader. Yes, we could be the trend trader and it works out. But the question is, what is the probability of that happening? It could be low. But when we look at a situation like this, if we move over here to the left just a little bit, look at the difference between the space here and the space here, where the market may not have a lot to pull back if the trade works out and if you're triggered into the trade. But this is what we call a narrow market, and they're both volatile markets. This one just happens to have a little bit more range to it than this one. So in this market, I actually like trading the trend continuations better than maybe in this market over here. So this is what we mean by market conditions. And I really pray that you guys got value out of this video. I use the same concepts the same knowledge, the same strategy that I did trading the forex market. I just applied it to this market, and I figured that the 2 minute and the 1 minute time frame really do work best for me. You may have to find the hour that works best for you and the time frames that work best for you. And in the next video, I will be talking about the pros and the cons, or the positives and the negatives that I'm learning along the way when it comes to scalping the Nasdaq futures market. But right now, there are more positives than there are negatives, and I'm actually excited to be learning this market. So if y'all have any questions, make sure you drop them down in the comment section. Make sure you subscribe, and I'll talk to y'all in the next video. Be blessed.